Bitcoin is staggered into 2022. It ends the year slump in an alleyway robbed of its cocktail of cheap money leveraged bets, shunned by the establishment. The preeminent cryptocurrency has lost 60% of its value, while the wider crypto market has shrunk by $1.4 trillion. Squashed by rising interest rate, vanishing risk appetite, and corporate collapse including Sam Bankman-Fried's FTX. Crypto funds have seen net inflows of $498 million in 2022 versus $9.1 billion in 2021, according to data from digital asset manager CoinShares reflecting how mainstream finance has steered clear of the market through its NS horribles. James Malcolm, head of FX strategy at UBS, said that in the first half of the year he had spent 70% of his time with clients talking crypto. By contrast, during 10 days in North America last month, from Montreal to Miami, I spent less than 2% of my time discussing crypto. Even last year, before the decline began in November, cryptocurrencies were realistically seen as 2 or 3 years away from winning acceptance from mainstream institutional investors, Malcolm added. Now it's completely in the far distant future. It has not been all bad for crypto though. 2022 was also the year the Ethereum blockchain finally pulled off its merge. Mega upgrade, which moved into a less energy-intensive proof-of-stake system in September. This event was a technological feat and one of the lone positive events in a year that otherwise has been rather dark for crypto, said Anthony Georgides, co-founder of the Pastoral Network blockchain. These upgrades will make the Ethereum ecosystem far easier to use for people all around the world. Because of this progress, it's hard not to be a crypto optimist going into 2023. Ben McMillan, Chief Investor Officer at IDX Digital Assets, said, "The rising popularity of blockchain-based tools including decentralized exchanges and decentralized finance had also been an important development this year. So that is very bullish for the ecosystem and something to keep an eye on long term." He added, "We could see bigger allocations to digital assets once risk appetite resumed in 2023. Bitcoin hit a record high of $69,000 in November 2021, with the crypto market touching $3 trillion, buoyed by fiscal and monetary stimulus from countries around the world trying to ward off the economic damage from COVID lockdowns. But as societies reopened, surging inflation forced central banks to tighten rates and lead to investors fleeing higher risk assets, tech stocks, and cryptocurrencies. Bitcoin, long heralded as a handy store of value in times of inflation because of its limited supply, flopped during the test, with investors turning to tried and tested havens such as the dollar as rate went up. It fell by about a third in January, outpacing an 8% fall of US stocks. 2022 was a new environment for digital assets. They have never been around in a recession of rising rates environment, said Katie Talati, Director of Research at digital assets firm Arca. As investors pulled money from crypto, major projects came under strain. The first to crack was Terra USD, supposedly a stable coin, and its sister Luna. The coin sank in value in May, with investors globally losing an estimated $42 billion. The shockwaves reverberate through the market. US crypto lender Celsius froze customer assets in June and revealed a $1.2 billion hole as it declared bankruptcy. Singapore-based crypto hedge funds Three Arrows Capital went bust the same month. Bitcoin and other tokens took a hammering, slumping by over half in just 49 days from the end of May. On a single day in June, Bitcoin fell over 15%, its worst day since March 2020 when COVID caused royal financial market. But the biggest crypto shock was yet to come. In November, major exchange FTX crashed into sudden bankruptcy. Bitcoin fell by a quarter in less than 4 days as Bankman-Fried scrambled for funds to bail his exchange out. The cryptocurrency is now hovering around $16,000. All in all, 2022 has pretty much been a crypto calamity, or an economist Noel Exon puts in. The year in which the leverage-inflated bubble popped, revealing the structural weakness of an industry that had grown too big, too fast. If you loved the video, then like, share and subscribe to our YouTube channel.